Well, thank you for staying tuned. Now, last month was considered a difficult period for financial institutions as global financial system, two lenders in the United States, a major bank in Switzerland collapsed within the space of 2 weeks, sparking fears that the world was about to witness another financial crisis, hacking to the 2007-2008 global financial crisis. On March 10th, Silicon Valley Bank, California, was taken over by the U.S. Federal Deposit Insurance Corporation. In Nigeria, the banking sector also struggles with challenges in their day-to-day business operations, yet their financial performance is not being affected. The challenges from operational activities, regulatory from agencies such as the Central Bank of Nigeria, the NDIC, Securities and Exchange Commission, amongst others. Also, some of these banks are left behind in technological innovation in aspect of financial transactions, movement of high volumes of deposits or capital flights to foreign banks, with reduced banks' opportunities to expand their market base and prevalent to fraud and in the sector, which also hinders the sector. To x-ray Nigeria's banking sector's performance, let's talk about this. I introduced him earlier. He's the Chief Executive Officer at Cowrie Assets Management Limited, Mr. Johnson Chukwu. Good afternoon, Mr. Chukwu. Thank you so much for your time joining us on the program.
Good afternoon, Tony, and thank you for having me.
I'm sure you listened to my introduction. Let me start the question like a layman will ask. How safe, how resilient, how strong are our banks at the moment with all of these challenges and what we've seen even abroad?
Well, I think Nigerian banks are quite resilient. The reason is that many Nigerian banks are carrying so much of a huge capital base. If you look at the solvency of Nigerian banks, if you look at their capital adequacy, if you realize that the Nigerian banks can weather some difficulties, unlike what has happened in the US. So, and also look at the quality of their earnings. We've also seen robustness in terms of the quality of earnings. But that does not take away the fact that they will still be exposed to some uptick in non-performing loans, as we saw in the case of Zenith Bank. But on average, one can say that Nigerian banks have quite strong capital base to be able to weather any sort of systemic difficulties that may happen in the financial industry.
Now, even at the World Bank meeting, sidelines of that meeting, they said there is need for more support to expand global liquidity. Can you tell us how that can impact us if that happens?
Well, when you talk of expanding support, the support will certainly come from the central banks, as we've seen in some countries. If you look at a country like Switzerland, where Credit Suisse Bank was almost going on down until it was acquired by the UBS. Remember that the Swiss government, the Swiss Central Bank, put in more than $400 billion into that to support that acquisition. But beyond that, we've seen situations where, like a bank like HSBC had to acquire SVB, that is to avoid the contagious effect of the collapse of SVP in the UK banking system. And so basic thing when you talk of liquidity support, it certainly had to come from the central banks. But unfortunately, the central banks do not have the limitless resources as to intervene, which is why the collapse of Credit Suisse Bank sent panic buttons around the world. Remember that Credit Suisse Bank is one of the 30 most important, systematically important banks in the world. And the concern was that should anything happen to UBS, then the Swiss Central Bank will not have the liquidity to support it. The U.S. Federal Reserve Bank has said that the financial system in U.S. is quite strong despite the collapse of 3 banks. You had mentioned those 3 banks. You have the Signature Bank, which was the regional bank. You have the SVP, and they have the First Republic Bank, which have all gone under. But the U.S. is also taking measures to ensure that this doesn't lead to a contagious effect. But on balance, the key thing is that with the world central banks after the 2016 global crisis have the wherewithal to support the financial system should they go into a tailspin. And that's why the emphasis should be that the banks will be very circumspect in terms of their risk asset management, as well as boost their capital base.
Now, back home, considering what we've faced some months ago, we've talked about this, and it's a running issue. We're not staying really with that. But the headline now is some Nigerians, or many Nigerians, are shying away from the banks all the banks are doing, most of the bank officers I've spoken to say they are doing more of paying out. They are not receiving funds from customers. What does this mean? Does this worry you in any form?
No, it wouldn't worry me. The reason is this. Most Nigerian banking customers do not have liquidity in their homes. If you recall, it was only just a couple of days ago that the bank started releasing cash to bank people. So what has happened in the past 8 weeks or 10 weeks was that banks were refused or were compelled by the regulator not to release liquidity to the banking public. So the banking public does not have so much of liquidity to go and lodge back into the banks. It's only when liquidity begins to circulate around that you have an average bank customer will have cash liquidity to go back to lodge into the banks. What they're doing now is that then whatever amount that you're able to withdraw from the banks, you're using to meet your payment obligations. Some of these things have stacked up over the past couple of weeks. So liquidity has to flow back into the economy before the public will now have surplus liquidity or excess liquidity they want to lodge in the bank, back into the banks. So it shouldn't be of any concern to anybody because liquidity has been stuck with the banking system and it is just now being released to the public. And it's only when the public has met their funding needs that they will now go back and lodge the excess cash they have into the bank again. So it shouldn't be of any concern to anybody.
Restructuring of Ghana's sovereign debt is also something that experts have been talking about and saying it will put pressure on Nigeria's largest 5 banking groups. Please, I'd like you to shed more light on that and let us understand what that means. Is it really any impact on us as a country?
Yes, well, what affects Nigerian corporate entities will certainly affect the economy because if the banks have so much of write-off, they have to slow down credit creation, which will kind of constrain the available liquidity or credit that will avail to businesses to do to run their operations. But back to the issue around the default by Ghana on its local bonds as well as its sovereign bonds. Nigerian banks, particularly the big Nigerian banks, have branches in Ghana, which means they are exposed to Ghanaian risk. And many of them actually have invested, the Nigerian subsidiary, their Ghanaian subsidiaries have invested in Ghanaian local currency instruments as well as Ghanaian sovereign bonds, as well as some Nigerian banks and Nigerian corporates invested in Ghanaian Eurobond. And as we speak today, there's regulation that Ghana could request investors to write about 30% of the face value of those bonds, as well as ask for some form of interest for forgiveness or interest restructuring. So the banks have to factor those losses in their balance sheet, and that is why some of the banks are actually indicating that they will absorb some losses from their Ghana bond holding. And like I said, if you want to look at the macroeconomic implication of such write down on the assets of Nigerian banks, is that it will constrain their liquidity and it constrain their ability to lend. And whatever constrain the ability of banks to lend, given that the banks that we're referring to are the big top 5 banks, they need to constrain the flow of credit into the economy and possibly limit the amount businesses can borrow, and possibly as well as lead to an increase in lending rate.
Great stuff. Like that, that explanation makes it clearer. And I also pick a point, very important point there. But let's move on quickly. Mr. Chukwu, online banking is also taking charge now following the cash crunch. And we see even the FCCPC regularizing about 173 of them sometime last week. I spoke to the CEO of the FCCPC and he understands that this looks like the way to go. Does this affect regular banking in any way?
Well, the basic thing is that banks provide services to multiple channels, delivery channels. The online banking platform is one of the multiple delivery channels. But interestingly, financial technology operators or fintech operators are now foraying into that online space. There is what we call disintermediation today, where people can actually do transactions without going to the banking system, which is what the fintech or technology is going to bring in. Technology or digitization is the way to go. And I know the banks are all quickly embracing that. Many banks are adopting the holding company structure, so that they will also be able to incorporate within their holding company a fintech business that will drive their multiple channel delivery strategy. Clearly, this will make banking services more available to the public and also reduce the cost of transactions and ultimately improve financial inclusiveness. Clearly, I believe that this will have a salutary effect on the economy in the medium to long run.
So with all of these challenges and the headwinds identified, because the banks are also facing high inflation, interest rate issues, forex issues, they have to provide power for themselves in some cases. Do you think the banks will pay a lot of dividends this year, or do you see them cashing out normally the way banks used to come out with those beautiful, large, huge, beautiful figures as we move on in 2023?
Well, I think the banks have gone through some headwinds in the past, in their past financial year that ended the 31st of December. Apart from a few banks, the likes of Stanbic IBTC that came out with a net profit after tax of more than 50%, and UBA that came out with a net profit after tax of above 40%. The rest clustered in the region of 13, 14, 15% growth in net profit after tax compared to their previous year. And for the first time in a long while, Zenith recorded a decline in its profit after tax, of course, because of the huge impairment provision loss they had to take. So in effect, one could say that the inclement economic environment has affected the profitability of the banks. We've seen many of those banks struggle to grow their top line by just in the region of 10% to 15%, and dealing with high increasing costs, which you have emphasized the issue of high inflation rate, which has a direct impact on the cost of providing banking services, and as well as the exit of some of their competence hand to competing countries like Canada and Europe. So this have all affected the banks, and which is why I said, in terms of the bottom line, most banks are struggling. We are struggling to make above 10% growth in their bottom line, as well as struggled to achieve material improvements in their top line. Apart from those few banks I did mention, Stanbic IBTC and UBA, the rest clustered in the region of 10 to 15%, 10 to 10% increase in their top line, and around the same range increase in their bottom line.
Mr. Chukwu, something just came in my mind before I let you go. What about the regulators? Talking about Nigeria now, what do you think of their relationship with the banking industry?
Well, the Nigerian banking system would actually say that the regulator is quite overbearing, a situation where the regulator is like an alpha and omega. I've always said is that the banking chief executive cannot object to comments or statements or positions presented by the regulator. That shouldn't be the case. We should allow for some level of robust process of arriving at some of these policy directives that we get from the regulator all the time, so that when the operator with the banks are and the regulator are involved in some level of engagement in coming up with these regulations, we will going to have a more robust financial system. Remember that in real life, operation or practice always precedes regulation. It is when practice is a move on that regulator will first understand the practice and then try to regulate it. If you don't have a kind of accommodative approach to regulation, as a regulator should see themselves as business facilitators and not as enforcers, then it kind of constrain development in that industry.
Mr. Johnson Chukwu, I must thank you so much for your time, as usual, on the program. Group Managing Director, Chief Executive Officer, Cowrie Assets Management Limited. Do enjoy the rest of your day.
My pleasure.